There's a sort of wrap there, a bit of news in the commodity sector at the moment. That number looks big, and we know that platinum's been under pressure. There have been environmental issues in the sense of political pressure. Zimbabwe, we've got safety stoppages, we can talk about those. But 24% perhaps needs a perspective to be put on it.
Yeah, look, I mean, that is the refined number, and obviously, you know, like Amplat's guided, they had some maintenance work that they did on their smelter side. So actually on a equivalent production unit basis, i.e. the amount of production they managed to get out almost up to the last point, because the processing part they can catch up, you know. So I wouldn't read too much on that number. More importantly, the production number, which was fairly strong, up 5%, and especially coming from their own mines, you know, that number was up over 10% compared to Q1 last year. Yeah. You know, on the JV side, they battled with their joint venture mines. There we actually seen a decrease in production on that front. You know, so I think the result as a whole was good. We've seen improved grades, improved efficiency, and then recoveries. You know, I think out of Mogalakwena and Unki mine, especially of that, we've seen increased recoveries coming out of that mine, which was encouraging to see. But I think, you know, one mustn't read too much in sort of this first number. They also haven't given any guidance on cost, which is a problem. Or sorry, they have given guidance on cost, but they haven't given the actual cost numbers for Q1. So they're still looking for the upper end of about 14,500 Rand per ounce. And, you know, I'm skeptical. I think that they may even go above that this year.
What about the safety stoppages? You know, we've heard that the issue is that the whole mine closes instead of just the part where the issue happened, the accident happened, or whatever it was. They talk about 13 stoppages in Q1 compared to 21 in the first quarter of last year. So that does seem to be an improvement. To what extent is this, from what you can tell, is this good management, better practices, or a bit of good luck?
Look, I think, you know, the whole industry got a bit of a rude awakening in Q4 last year. And we've seen increased, I think, attention given to safety, more focus maybe. But we've also seen, you know, that the environment has improved. They almost said like February was better than January and March was better than February. So we're seeing improvement in trend on the back of the safety stoppages, especially on the platinum side. You know, it's almost to a point where it sounds like at the moment where the occurrences is back to sort of normal levels of safety stoppages. So, you know, it is an issue that's got to be taken serious, and I think that's what the miners has done.
Yeah. Impala, the other big player there, last week they reported that the Rustenburg operation was still not back to full production. That's 6 weeks after that strike, so they've had a lot to deal with.
Yeah, it is. You know, it has been really a painful process, you know, for them to get back on track again, you know, and who knows how long it will still take. It has been a while, you know, but you know, the underlying what one sort of got from ground level is there's still a lot of stress, I think, in terms of the workforce. The morale is down. You know, it's not sort of a one-day game sometimes to get those things up again and to get back to full production. So, you know, we maybe slowly creep up to production even through this, you know, through this Q2, and you know, one just hope that it sort of catches up very quickly.
Sounds like some growth could be coming and that there might be recovery. They're also talking, you know, in Europe, where the demand for automotive products, that's still depressed. But long term, this has to be a value.
Now, look, I mean, we've seen the vehicle numbers coming out of Europe, you know, and I think the last reading in March that was down about 9% year on year, a contraction from the auto guys. You know, and we've seen also, you know, obviously Impala couldn't supply in terms of their contracted metal into the market because of the strike. You know, and I think a lot of these automakers were able to actually buy the metal in the market without any major price action. So I think just given the lack of a price action we've actually seen during this period tells you there's a lot of metal around. And I think as long as Europe going to stay weak, you know, this environment's going to stay weak for the miners.
Let's move to Kumba, which has generally been a very long success story. Their production up 15% year on year, export sales up 18%, though domestic sales down by 6%, and apparently that's because of ArcelorMittal demand dropping.
Yes, ArcelorMittal still down. I think their sales 21% on a year-on-year basis. But like you said, you know, it has improved sort of from the last quarter. It was up a bit. Look, I think it's sort of a two-tailed story here. We've obviously got Kolomela, their new mine, the new iron ore mine Kolomela, which the ramp up actually exceeded everyone's expectation. And again now, the numbers we've seen coming out of Kolomela actually puts it in a very good position to actually beat the 4 to 5 million ton that they've actually guided for this year.
There's another number in their report which I haven't seen quoted anywhere, but it's there. Their Q1 this year was 30% higher than the Q1 last year.
Yeah, I mean
this is big growth.
Yeah, the volumes are coming through, and I think one can criticize them if you want to on Sishen mine. We've heard about the absenteeism of the sort of the drunkenness on the dividend of a lot of the employees. I think, that we've seen a lot of
the drunkenness of the dividend.
that we've seen a lot of absenteeism coming through. During the first sort of month, January, and sort of it seems like following through to February, but it sounds like that has improved now. It sounds like the numbers are getting better and sort of back again to better levels. So it was a slow start to the year, I think, given on that, and they guided about the waste stripping that they're busy with on the Sishen mine, and they had wet weather conditions, obviously in the pits, which affected production also negatively.
Just to finish off on gold, I always find the gold sector so extraordinarily interesting, and Goldfields, which has done very well in the last couple of years, they've got that new project. Your assessment there?
Yeah, look, I mean, to me, a lot of these projects, for me, the most important in these new projects is discipline. Because I think sometimes when you see the gold price trading at these sort of levels and give these type of margins away, you could see ill discipline. It's not just in the gold space, I think across the mining space as a whole. So look, I mean, it's a step in the right direction. They're obviously working towards that 5 million ounces that they want to do. But I think it's I'm not too sure whether we will see those ounces actually coming in when they actually guide it on, I think one will, the focus for me is more on operations. We've seen on the latest quarter, on the quarter one numbers that, it was maybe better than Anglo Golds and Gold and Harmony, but we are seeing these guys are under pressure, and one would hope them to concentrate on this and always to remember the sort of that whole return on assets, return on your capital that you actually invest.
We were talking about SA breweries earlier, and what they are very keen on is cutting costs in good times.
Yeah,
because that's when you really need to.
100%, and
set up for the bad times.
Correct, and it's so easy to let things slip in the good times, and that's what I would like to see out of the gold miners.
Such big numbers they have too, and I liked your term, drunkenness of the dividend. That was Kobus Nell, mining analyst at Stanlib.